can tell you, okay, you're fine. You can keep going. You're not over the edge. You kind of have to recognize like what is your limitation, and you got to figure out, okay, how do you overcome that? And I think that was one of the things that I got from my coach.
Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. If you're enjoying this show, leave us a rating and review. We'd love to hear from you. We also want to get that feedback to help this show work harder for your investing goals. And if you haven't done so already, make sure you hit that subscribe button so you don't miss an episode. We've got a great show today. We're going to be talking to Maggie Cheung. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the Mastermind button today. Maggie Cheung is the co-founder and managing partner of Sage Investing Group. Now, Maggie comes from an audit and risk management background and has been investing in real estate since 2011. Prior to transitioning to full-time real estate, Maggie has worked in large financial firms on Wall Street, where she specialized in risk management for the firm's investment banking and investment management businesses. Let's welcome to the show, Maggie Cheung.
Hi, John. Thank you for having me.
Absolutely. Hey, Maggie, I'm excited to talk to you today. I know we've had a chance to meet in person a couple times and chat a little bit, and it's great to have you on the show. I went over your bio at a very high level. Why don't you take 2 minutes and fill in some of those gaps?
So like I mentioned, I kind of grew up in a small town, so in Delaware. So, my family has a restaurant business, so we kind of grew up in a very humble background. And as I think a lot of Asian parents who's immigrant, they want their kids a stable job. So I went to accounting. So accounting, and I've been in audit field for 13 plus years before I transitioned into full-time real estate. Took us some time off to kind of figure out which real estate investing I wanted to do. A year exactly, because it's kind of like a career transition, right? So I finally landed in multifamily investing, and then I kind of went full force a few years ago. And that's where I found my partners, and things are starting picking up probably in very more recent years. So that's in a nutshell, a little bit about me.
Yeah, I love that. You talked about, growing up in the middle, you said Delaware, right? Small town in Delaware. You live in New Jersey now, of course, but grew up in Delaware. Family has kind of restaurant business. They wanted you to have something more stable. You picked accounting, did that for 13 years, took a year off when you realized you wanted to get into real estate, but you didn't know what exactly you wanted to do in real estate. Talk to me about kind of that process, right? I mean, what strategies were you exploring, and what were some of the pros and cons that you weighed before ultimately deciding on multifamily?
Yeah. So I took accounting, but I don't ask me to book any entries. Because my career has been, because even in the accounting field, you have different fields you can get into. So I was in auditing. And I think being in the audit mindset, you kind of have a process to evaluate certain things in a certain way. So I think I kind of approach when I went to decided myself and my husband, right? Because it's a family decision. When we go to real estate, I really have to immerse myself. Like, what is it? How can I use my past skill set to apply to this new career or this new, what is it? Which avenue I'm going to try. So that first year, it was really trying to give myself a grace period to try out different things. So I did in the beginning, like many people, I got my real estate license, was trying to grow my own portfolio in New Jersey, acquire more single family homes and rent it out and try to scale it. And so for the first 3 months of real estate agent, I really try to immerse myself, like the cold calling, the door knocking, really. And I think there's this kind of like a mindset shift, internal struggle that I have to battle through, because being in a corporate career for 13 plus year, VP in my position, and I became like humbled by door knocking and cold calling and doing all that. So that was a really, really a humbling experience, and I felt like it was definitely an internal struggle, a self identity that I had to overcome. But I definitely did learn a lot from that first job, because I quickly learned that I did not like it. So after 3 months, I kind of transitioned to, but I was able to kind of pick up what I learned from there, um, and I actually met a really, really great real estate investor, and it's a woman. She's a flipper, a local flipper, and she was one of the ones that I really look up to, because if she's a female and she was also a former accountant. She's been in her business for 4 years, flipping business, and she's like wearing high heels and going to construction site and like bossing these these construction workers, or other men, all men around her, but she's like a boss. So I look up to her and I ask her if I can just shadow her and work with her for a few months. So I did my best of my ability to help her streamline her business. So kind of went to construction site, really trying to get the ins and learn, and also provide value. Like I was able to kind of help her evaluate deals, because that's kind of what I liked, spreadsheets. Right? So in those 3 months, I realized that is not something I actually want to do as well, because I don't want to be in the construction site managing the guys. But I did learn, like what I did like from it is that the analysis, the looking at good deals. And so I took that on, and but in the meantime, I was doing a lot of conferences, meetups, talking to other people, their strategies, and kind of stumbled upon syndication and multifamily investing. And I invested my first deal. Joe Fearless is my first deal that I went into. And after the first deal, shortly after, we invest another deal and another one and another one, probably 4 or 5 of them with different operators. Because that time I was like, oh, this seems like a great avenue. I don't know what. First of all, when I was working in the bank, I was not allowed to do a lot of investing. There was so much stuff that was limited. I can't even invest in single name stocks or anything like that. So it's just so much restriction. So it prevented us to invest on a lot of things. But first of all, when this syndication approach, when I was in the bank actually do something like this too in their private equity, where they package these large deals together. And granted, it's much larger zeros behind it. But it was very helpful for me to kind of see, okay, what are the bankers doing? How did they do a due diligence? How they filing SEC? How they raise capital? So all that was very familiar to me. But now it's more in my personal life. I was able to kind of invest in these type of deals which I did not know before. So after the 4 or 5 deals, I just kind of realized, okay, there might be something here. How do I get more on the other side, on the GP side? Like, how do I get behind the scenes? I wanted to know the nitty gritty, and I just wanted to be more involved because I'm so fascinated and excited about this. So,
Man, Maggie, that
not
was
there before you.
no, listen, that's amazing, because you talked about that year and just trying to figure it out. And I think it's extremely helpful for people to hear kind of what that journey looked like. You talked about being a VP in kind of the accounting world and leaving that to door knock, right? And here you are, cold calling, knocking on doors. And I'm sure at some point you're getting ready to knock on the door, asking yourself, what am I doing? And you probably had that moment like, I left my job for this. Like this is what I'm doing. But you knew you were doing it for a reason and realized that the strategy was right, but maybe this particular, tactic wasn't your thing. You knew you wanted to invest in real estate, but door knocking wasn't really for you. So I love that you just shared that context. From there, you kind of went on, found this woman, who was, flipping these properties, had a similar background. You kind of shadow her. She becomes your mentor. You help wherever you can. You realize you really like the analyzing deals, not so much the construction management side of it. And that's what takes you into multifamily, starting on the passive side, investing in these syndication deals, and then eventually deciding that, you know what, I like this a lot. I want to be more active. How do I become a general partner on these deals? I think just a few insights I want to point out. One, be willing to fail. Be willing to try something that's outside of your comfort zone, that pushes you to do something that you don't like, because everything you do in this space gets you closer to what you actually want to be doing. If you weren't door knocking and doing those cold calls, maybe you don't meet this investor who is the flipper. And if you don't meet this flipper, maybe you don't analyze as many deals. If you don't analyze these deals, maybe you don't invest passively in that first deal. So even though they were different strategies and they may not feel like they're connected, each step kind of leads you to the next thing. So it's really important to do something, to take action, and at least start moving in the direction of becoming a real estate investor. So I love that you took some action, even if it wasn't exactly what you wanted to do, even if it wasn't even closely aligned to what you were doing. You started moving in the direction you wanted to go. And I think that's a big, powerful insight for many of our listeners there. Let's talk about that transition from being the LP on, sounds like what, 4, 5, 6 or so deals, to becoming a general partner on deals. What were some of the challenges you faced?
Yeah, I think externally, there's no one around me that's doing this stuff. So it's very hard to kind of even know like where to start. But I think it's uh, because I know, I guess like because I became a real estate agent, there's what I learned from there is like a lot of people have coaches and they are open to coaching and it actually helped them drive something. So I knew that there was something, having a good coach or mentor does really help and propel you faster, and especially in entrepreneur world. And when I was in corporate world, there wasn't like there were some coaching, but it was like, but it wasn't for you're working for someone else, right? There's nothing really to coach for. You're coaching for your when you do work for yourself. You definitely their entrepreneur mindset is just John, it's like a roller coaster. So you got to figure out, you had to have somebody kind of push you through. And I think that was one of the best lessons I learned from when I was a real estate agent, to be open for coaching. So um, so when I recognized when I was wanting to get in the GP and then multifamily, I have to start finding, okay, what are the good coaches out there? What are the questions that I need to ask? Like, I don't even know what I'm looking for, or what side of the general partnership, what type of role that I can take on immediately and also long term. Like, how does it look like? All that questions I need to answer, or questions that I don't even know how to ask. So the first thing I want to do is like talk to a lot of people, and also listen to a lot of podcasts, including yours as well. So, and ask like, hey, how do you get to where you are? And what, if I'm looking for coaching, who do you recommend? So it's kind of scanning. There's usually like, at the end of the day, it's like 4 or 5 coaches that come to me in my circle, or people who are a little ahead of me. And I just kind of set on an interview and talk to them, and see if there was a good fit. It was not just more, I was looking for 2 things, right? One is like, okay, how is this coaching going to be able to help me propel my multifamily real estate career, right? And then the other thing is like, is there a good culture in there that makes sense for me, and very positive, also inspired me to continue on and push me forward. So did I answer your question?
Yeah, I mean, it sounds like your biggest transition there was,
Yeah,
realizing that you needed a coach. As you went from the
yeah.
LP to the GP side, you realized you needed a coach, started to talk to people, get some referrals, and then ultimately kind of landed on the process you wanted to move going forward. What benefit did you get from coaching that you feel you wouldn't have gotten if you tried to do it by yourself?
Yeah, I definitely know that because of being an audit background, I definitely have a tendency to be analysis paralysis.
Yeah.
That's something that I recognize. So it's even worse if you're trying to make $1 billion deals, right? So it's like, how do you get yourself to move forward. And that's one thing that I think the coach that I work with, or on the mentorship group that he created, he's actually have a CPA background as well himself. So I have that relatability with him. And so if he's able to kind of overcome his own analysis paralysis, like, okay, he can help me. How do I take a couple of steps forward? And he can tell you, okay, you're fine. You can keep going. You're not over the edge. You're fine. So that was what I was looking for. And I think that you kind of have to recognize, like, what is your limitation, and you got to figure out, okay, how do you overcome that? And I think that was one of the things that I got from my coach. And generally, there was another thing, like, the Mastermind group is very helpful because everybody has different skill sets, and it was very helpful to tap into other people who are striving to better their lives. And so almost like I think one of the things that was difficult for me was being in corporate, it got you so far. Now you're being an entrepreneur. What do you have to change in your own mindset in order to get to your next level? So that was a lot of soul searching within too. So
yeah, I think your point there is really spot on, because I always tell people that, mentors are not magicians, and coaches can help, but it helps you to understand what exactly you're looking for coaching for. And part of it is recognizing the skills you have. It also is recognizing your weaknesses or limitations, or those things that can hold you back. And if you can find someone who can help get you over those hurdles and propel you forward, that's going to help you see success in this business, or at least continue to move forward in the right direction. Talk to us about the portfolio. So, we talked about the transition from LP to GP. Coaching obviously had a big role to do with that. Where's the portfolio today?
Yeah, so we have about so when we had about a portfolio is about 2,600 units, but when we started, we didn't take on a bigger role in the many of these deals. So the deals that we are really control of is out of the 2,600, 388 units, which is in Dothan, Alabama. And I'm saying this because people think that when you take down deals, you take down the whole thing, but there's a lot of partnership. A lot of people are behind it.
A lot of
And
collaboration.
Exactly. Especially if you're the first time, you don't want to be the one in the driving seat. You want to be the one in shadowing, right? And of course, doing your due diligence and learn the ropes in order to scale there. So now we're able to say, hey, we are managing 380 unit in Dothan, Alabama, like in and out. So that's kind of like where we are right now. And we're hoping to continue to scale and grow the portfolio. Yeah.
And I think listening to your trajectory, it makes a lot of sense, right? So you start off on the LP side, transition over to the active GP side, and then kind of move over to more of that operator or that lead role, where now you're the one, calling all the shots and managing the asset and working with property managers and all that. Talk to me about that. Like, what's that role like when it comes to being the operator, asset management? You said Dalton, Alabama, is that correct?
Dothan.
Yeah.
Dothan,
All
yeah.
right. So talk to me about that, right? Because,
Yeah.
I know you and I've joked about that location, but just, you know, asset management, actually making sure the property is operating and moving in the right direction is very different than just being the LP. So talking about some of the things you've learned and the kind of growth you've seen being kind of that operator.
Yeah, it's a lot of work. uh, and I think a lot of people underestimate how much work it is. But it is a lot of sweat. That's the bulk of the sweat equity. It's one thing you take down their deals, and another thing when you have to manage this business plan for the next few years. So it's not just me as well. I'm still in my partnership. I have two other ladies as well, who's also auditors, career auditors. One is my partner Lana, and the other one my partner Jen. So my role, particularly in the three of us, I do more on the acquisition side, but I do because we're a small team, we kind of help out each other on other areas as well. And my partner Lana, she does more on the asset management now, and also my Jen, she does the capital raising. She brings in the capital. So, but we all help out each other in one way or another. Asset management, there are times where we have to kind of like buckle down. The other, I think a few months ago, we were looking at playground, and it's a simple thing, right? You're getting quotes, but the property manager getting quote, but it's like as an owner, you got to look at the quote. It's like, are you getting the best price? Or maybe it's the agent and us that we have to make sure that we got the best price for that person. But have all their, they make sure they have built an ADA RAM into that quote and everything and compare all that. So we, scope out and basically got like maybe 10 other quotes just to make sure that price is right. And we got the best thing. So it's not rocket scientist, but it's a lot of work. Because if you imagine that little thing takes up a bulk of your time, make that times 100, because you're going to have to evaluate day to day, every day, what is the best decision for this property, and is it on the trajectory to connect, to deliver what you promised to the investor, or at least present it to the investors, right? It's no guarantee, but you're every day you're trying to aim to make sure that the projection is getting to where it should be. And that takes an army of people to help you out. So I am so grateful that we have a really great on-site team, and it's incredible that you're actually impacting the lives and the community more. That's one thing that that's one thing that really, really, I guess, help us really believe in that mission, because you're doing more, you're bringing this community alive. And so I love seeing like events where the families are getting together and going around pool parties, and there's a vibration in that community, and you're a part of that. So that's really beautiful thing to see.
I love that. You talked about kind of the operations, and there's a lot of moving pieces, and every decision really comes down to, is this helping to build community? But more importantly, for investors, is this allowing us to implement our business plan? Is this allowing us to deliver the returns, the projected returns that we kind of laid out? And you're making decisions based on that. So you're not just going to take that first quote from that contractor. You're going to go out there and get, 3, 4, 5, in this case, 10 quotes, to make sure that you're getting the best pricing available, so that you can be a good steward of your investors' capital and deliver the returns that investors are looking for as well. We talked about kind of this being, I keep forgetting the city, even though I just said it. It's Dothan?
Dothan, Dothan.
D-O-T-A, Dothan. Okay. Dothan,
Yes.
Alabama.
Yeah.
I don't know where that is. And I guess many of our listeners may not know where that is. So this is what we consider kind of a tertiary market, right? A much smaller market. Talk to us about kind of the process, and what was your process like going through to identify this market, or what made you comfortable investing in this market?
Yeah. So yeah, we joke about this all the time. So we actually did not know about Dothan, Alabama. Like
If
you,
anybody did know about Dothan, Alabama, they had to grow up somewhere close by, because I don't think that's a household city. So
yes. Hey, Kevin Hart is performing there in a couple of weeks. So
okay, that's headline news.
yes. So yeah. So we actually started deal hunting in Atlanta first. Like I think a lot of people you have to start somewhere. So we identify Atlanta as a first market to just concentrate, because also the reason why we look at that is because a lot of brokers are positioned there, or headquartered there. So we feel when you start well, at least we were told that you need to look at a lot of deals before you get your first deal. So we got to identify a market where there's a lot of deals that was our first progress, right? So and we underwrite a lot of deals. We underwrite 150 deals before we got our first deal. I think it was also like when we started, it was like January 2020, January, February. So it was right before COVID, right before the shutdown happens, and there was like hardly any deals flowing, and the deals that are coming out is like, it's not going to make sense, but we still underwrite it. We still go to the market to study and understand. I think partly is also because you have to, like, now looking back, it's not just underwriting deals to identify a good deal, but there's so many strategies that you have to figure out, okay, what do you feel comfortable with? So you got to marry your strategy and also your deal hunting, and to find the right, diamond in the rough that makes sense for you and your investors. So I think what we learned a lot is, like, we are not going to win in the Atlanta because there's so many competition, and everyone has to, they are bidding up the prices, and the underwriting is so slim. There's no room for error. And if you tell that to an auditor, like 3 of us, auditors, that is very scary. So like there's no room to make a mistake. And you have to overbid, so that's your margin error is even slimmer. So after a while, it's just like, okay, where else can we look at? And I think the one thing that helped us is, like, because we're underwriting so many deals, we are also giving feedback to the broker. So this one broker, who keep sending us off-market deals, it took him a year and a half, I guess, back and forth, and then I guess he stumbled across this deal, and he thinks that this is the right deal for us in Dothan, Alabama. So he, Maggie, he said, Maggie, this is your deal. This is, and what you're looking for is in a good area, good submarket. It has a higher income. People are making $60,000 in that area, and this is a nice clean asset. It's a 1970s, and it's clean, and you just have to implement the business plan. So I took a look at it really quickly to kind of see. Some of my gut check is just like, okay, is it really $60,000 area income? Does it have good schools? That's usually what I like to check. Is there a easy way to look at, okay, implement a business plan? So I was able to tell that it was, I guess the current rent at that time was probably like $500 or $600, but we definitely know there is like $200 below market. And nearby there is one other property that implement their business plan, and it was able to kind of, like, after renovation, push up to like $900. So there's a clear path, and so I can see that there's a really, really good chance that this is a good opportunity. So the next thing was just like more digging, to the point of, like, calling other properties and see if there's a wait list, so we can tell which we were able to confirm that. As you continue to do diligence and gone through, we actually had to put in 3 offers because the seller rejected our first couple. And then finally, when we were able to get in the contract, we have early access. So we were able to confirm the property is clean. But I think the one thing that people can continue to validate is, it's almost like an audit term, we like to call it trust but verify. So once you get on when we were locally, we were able to see that there is a lot of retail in that small town. The area is only 150,000 people, but there is like 3 or 4 Chick-fil-A's in that area. 2 big, like 3 major hospitals, and there was like a few Walmarts and Publix supermarkets. And so there's so many retail space in there, but it can't be just serving that 150,000 people. It just doesn't make sense. The math doesn't make sense, right? So what we found is that when we talked to the local chamber of commerce and the economic development, is that a lot of people, because it serves as a hub, that little city, this actually serves a hub as for 500,000 people in the radius. So people come in daytime to work, to play, and That's where things happen in Dothan. So we can see that there's a lot of sales money goes in. And we can also see that the city is continuing to improve themselves because we can see the road works and they're trying to expand the roads because there's a lot of traffic and a lot of transportation goes through there too. So we can also speak into economic development. It was really good to see the city is reinvesting and revitalizing the downtown. And they're also thinking like almost like 10 to 20 years ahead. So a lot of these things are on envelope, but it kind of reconfirm this is a good town. There is some vibrancies in there, and there is some trajectory and growth. And we like the local government are pushing it forward, the agenda. You can see it moving.
Yeah,
So.
I love it, Maggie. You just gave some great insights. And what I would say is, you know, listen, most investors want to invest in big, well-known cities, the DFWs, the Atlantas, these major cities, Orlando's that we know people are investing in. But the challenge here is that there's a lot of competition. And with competition means people are willing to take a little bit less on the profit. So they're willing to pay, or accept less on the cap rate or pay a more compressed cap rate for those assets. And what you did instead was you looked to more tertiary markets. You came across this one and you did three things I think stood out. One, you found a market that had less competition. Two, you made sure that you had a proven business plan. You validated that. You looked at the rent comps. You looked at another properties and saw what they were getting and confirmed that you could get at least $200 more in rent, if not more. You looked at the building and made sure the building itself was in pretty good shape. So you got all that information. And then the third thing was making sure that this was really a desirable location. The city was developing. There was infrastructure development, multiple Chick-fil-A's, multiple Walmarts, multiple retail sectors that were in there. And that lets you know that there was really good demand. So piecing all of that together, you had a lot of information to know that this was going to be an apartment community that would be desirable for the foreseeable future. We didn't mention schools, but mentioned the schools as well. So I think that's really intelligent way to approach it. And for anyone who's looking at a market, you could take some of this. You talk to the Chamber of Commerce and the Economic Development Council, and these are the little things, but they're important if you want to understand where you should be investing. They don't have to be the most importantly well-known cities and all that kind of stuff, as long as you're solid on the plan and you've proven out that. Talk to me real quick about just all that work and then translating that to investors, right? So obviously, I'm sure you had a lot of conversations. People are like, where's Dothan, right? So how did you get investors comfortable investing in this market?
Yeah, that's a great question. That's why our webinars are like an hour and a half.
It's like the main question, right?
Yes. So I think the one thing that uh, going back to my audit days, like we try to uncover all the questions, all the objections up front. And we, as a team, we listen on together, and we're able to we also solicit feedback from other people and other partners to see how they think about this particular deal. So going all of that, the first thing we want to address is the first major objection is like, where is Dothan? So we got to paint that story. Okay, show that, put yourself in the investor mindset, and why are we investing in Dothan? And so you got to go back and peel the layers. And it's like, hey, because it has good metrics, great data, and then kind of walk them through what the city is revitalizing themselves. So paint all that pictures and why this is a good town to invest in. And then you kind of walk them through the deal. It's like, hey, why is this particular pocket good? And why is this particular deal is good? Because it shows that metrics. It's a clean asset. All you have to do is put in the business plan, and there is a clear path, right? So that is the gist of it, but it definitely takes time, and it takes for us probably an hour and a half to explain all that.
Yeah.
Because you address all that concerns.
Well, and the reality is that some people are going to get comfortable with that and some people are not,
Yes.
right? And you're not going to make everyone happy. And that's just one of the things you have to understand is that some people, they're only going to invest in those big, well-known cities. And some folks are going to say, hey, listen, sounds like it's a great opportunity. Sounds like you've really vetted this opportunity in the market. Sounds like you got a good team. If you're comfortable, I'm comfortable. So all that to say, I think the key takeaway here is always focus on the location. That's one thing we can't change whenever we're investing. So do your due diligence, make sure you understand what's going on in that market so that you can ride the wave, not necessarily be the wave, right? You want to come into something that's already moving and already progressing, where other, city officials and governments and businesses, they're investing, and you're going to come in and invest alongside them, not where you're going to be the main thing trying to change the community around. So really love the way you kind of shared that, Maggie. And I think that's really helpful for a lot of people listening today. With that said, Maggie, for anybody who wants to learn more about you or your company, they can check out your website, sageinvestinggroup.com. Right now, we're going to go to our round of insights. Ready?
Sure.
All right. Give me a failure or an apparent failure that set you up for later success.
Oh, definitely. I think it's very hard to say failure because it's a lesson learned from each and every one, right? Multifamily, I think one of the biggest things is that at least when I started, there was not a lot of female operators. So it was a very daunting task to kind of overcome in here and find my spot and find my voice, so, and talking to brokers who are usually, they work with other guys, right? So so I have to work through that own limitation and over and over again and correct my head trash, and to pick up that call again and to continue to show up in conferences and talk to these brokers. And so I think that was one of the things that I do every day. And to this day, I still it's still there, but it's gotten a lot better. So I recognize that and appreciate that growth. So I'll say continue to grow from the failure.
Give me a digital or mobile resource you recommend for your business.
It's digital and mobile resource. So, well, you can find us on sageinvesting.com. We're also on Facebook and Instagram as well.
As far as what do you use for your business though? Yeah, what do you use?
Oh, sorry.
Yeah, no worries.
Yes. It's, if you look at data, I do a quick check on citydata.com on the cities, and that gives you a picture of past 20-year growth. How does it look like? It is a little bit dated, so it's before 2019. It stops there, so you kind of have to mirror that with some more recent news that you have to search to see if that is it continuing to projecting, or is it doing better, or is it doing worse. So a lot of resources that I do, it's pretty much free. So there's a lot of free resources out there. So, but City Data is usually the one that I go to as a quick check to see what that is.
Give me the book you've recommended or gifted the most in the last year.
Recommended, there's two actually. The One Thing by Jay Papasan and Gary Keller, and James Clear, The Atomic Habits, was really, really good. And I definitely recommend some people to take a look at them.
Love both of those books. Great books there. All right. Give me a daily habit that helps you stay focused on your goals.
Yeah, I work out in the morning. And then more recently, in the past couple of months, I've been implementing meditation. So those are usually my top two things that I do in the morning, and it sets me in the right mindset to start my day.
What's your number one insight for multifamily investing?
One number one insight, I'll say, for me, I was don't be afraid of, don't do everything other people do. I mean, you take it for a grain of salt, but you have to apply your own strategy.
Love it. Thank you for that. All right, let's lighten the mood. You are out there in New Jersey, North New Jersey. Give me your favorite place to grab a bite to eat.
You guys, you're gonna be making fun of me, but I do like my Chick-fil-A.
You're like, there's a Chick-fil-A here. We are investing in Dolphin. Got it. Listen, no, I love it. You know, you gave great information. I appreciate, learning a little bit more about your story myself and sharing that with our audience because, you talked about the big thing is you wanted to get into real estate. You made that transition, coming out of that audit background, going from, getting your license, cold calling, knocking on doors, working with the flipper and kind of starting to analyze deals there, ultimately becoming an LP before becoming a GP, and just sharing some of the things that made you comfortable investing in a smaller city that a lot of people aren't familiar with, but understanding all the due diligence you went through so that you could identify that this was or confirm that this was the right opportunity. Not to mention that, but just everything you learned on the operations side and sharing that information so that people can feel comfortable with that. And I think the big thing is, when it comes to representation, I heard you say that, you found these various women who had similar backgrounds and similar stories, and that kind of gave you some empowerment to continue to move forward and partner with people. And I think it is really important to find people that can help you succeed, whether that's mentor, a coach, partners. You want to have these people that can help you progress and actually achieve the dreams and goals that you have. With that said, for folks who want to learn more, they can go to your website, sageinvestmentgroup.com. Maggie, I just want to thank you again for coming on the show today, being a great guest, and we look forward to seeing you again soon.
Thank you. Thank you for having me.